Yesterday, it was a very, very lackluster move for the market. It's back to business, really. The budget seems behind us. Yesterday as well, you did not see any meaningful price action from the index per se. It was all about individual stocks, which, of course, we'll talk about in just a short while from now. But I guess in sight now is the previous high, Nikunj, 22,124. Are we going to clock that anytime soon or not? Because the Nifty implied open is already suggesting us getting very close to 21,900.
Budget used to have a lingering impact for weeks and months. Then it became like a impact which lasted for a couple of days. And yesterday's budget impact actually lasted for just 60 minutes. As long as the speech was on. So speech was 60 minutes and the impact was 60 minutes. So that is what it was. Look, the budget was a simple budget to understand, high on confidence, big on promise, and it really maintains a momentum towards keeping the economic momentum going. So I think it's a budget which, in a sense, will just keep the outlook and the economic momentum strong. But what happened on the budget day? Now that is important. Volatility remained low. India VIX corrected by about 10%, and foreign institutional investors, they built up long positions. Given that we've got a decent global setup also, US markets are in a good shape, crude is behaving itself, last night meta numbers were strong. Now that the event risk is behind us, whatever concerns, whatever yes, no's were there in the system, are we on course to make a new high, a decisive new high, and then really, branch out in what really could be called as the pre-election patch for the market. So the budget is over. Now optically market will move from pre-budget and the budget day action to the pre-election mood, and that is how the market setup is. FNO snapshot, Nifty futures trading at a 43-point premium. The long positions are there, retail long and FI long. So I will not be surprised that we make a new high and we perhaps take it from there. This frankly has been a good week because the small and the mid cap stocks have also done their bit. So, while individual stocks are important, the tone and the tonality is that the market, the sleepy bulls are ready to perhaps gallop again.
Yeah, you've practically lost your voice, Nikunj, with all the talking yesterday. I think
you have to take over today. You both have to take over today.
Wait for the weekend. But you have a few hours more to go, unfortunately. But yeah, here's how brokerages have described the budget, really. For instance, CLSA, just going to read the headlines. They say it's a judicious budget with key focus areas on affordable housing, railways and research. BofA calls it prudence trumping populism. That's how they're describing the budget in their latest note. And Jeffries puts it as doing the right things with tighter fiscal, jump in capex, and all of the government priorities being what everyone wanted. So yes, they've got some additions, Jeffries, to their model portfolio. They've hiked their overweight stance to L&T. They've got key additions like KEI, lower weightage to TVS Motor, Eicher, Kajaria, and NTPC. But basically, Nikunj, even the kind of tone that we're getting from all of the brokerages on the budget is that they have done the right thing, with fiscal discipline being the center.
See, what is normally the concern ahead of all budgets, which are the last budget before a new election cycle?
Yeah.
That something populist would be done. And there was just no mention of any kind of a large scheme, anything which was very popular. Now, that's a big departure in the thought process.
Yeah. But maybe that could take place in July. Perhaps not prior to, but post.
You would want to come up with a populist measure ahead of the election cycle. That's how it would move, right? That's how historically it's been. So markets were expecting something on that front. That, in a sense, has concern, in a sense, has not translated into reality. Second, fiscal deficit coming down. Well, I think that is something what you want. Fiscal deficit comes down. And if government is confident of bringing fiscal deficit coming down, that means they're expecting the economic momentum to really stay strong. And see what it means for the macro, the bond market and the currency market. So for me, the budget this time is a clear endorsement of fact that we are in a macro stable regime. Inflation is moderating now. And if nothing goes wrong globally, the 2020 second half of this year of FY25 could be another good year. And that explains why the bond yield actually went higher. That explains that why markets yesterday saw uptick in terms of the currency market and also what we saw in the banking space. So if you're frankly asking me for a trade which now opens up post-budget, I think long large PSU banks, beneficiaries of rupee appreciation, not depreciation, importers largely. And third, you actually would see indirect impact which will start kicking in consumer discretionary as interest rates will not go higher. So if you ask me that is there a bigger hint for the equity market or the bond market, I think the bigger hint and the bigger winner this time actually is the bond market, the factors I just mentioned.
Yeah, absolutely. But it's back to business as it was yesterday itself, and it's back to really tracking earnings. Today, you've got some important ones, and especially yesterday, Nikunj, with the thrust on tourism, the mention of that in the budget. And, you know, most of our experts, I recall Vijay Kedia, that was his top idea, right? Interglobe Aviation, that reports its numbers, and of course, Tata Motors.
I mean, the Simpson yesterday gave out some brilliant names. I never thought that the Simpson would have actually that exciting names.
Yeah.
Okay, so are we talking numbers? Are we talking budget?
We're talking numbers.
We're talking
Tata
numbers,
Motors, Interglobe Aviation, and UPL today.
Okay, so UPL has been a disappointing number.
Yeah.
Markets, frankly, have, I mean, I'm not saying they've given up on the stock, but markets, in a sense, have not been very happy with what's happened on the demand front, on the debt front. So it's just been a very dry and a rough patch for UPL. I mean, when markets have gone through the roof and look at UPL down 25% in the last 52 weeks. That is serious underperformance in my book, one. Second, let's look at the Tata Motors. Now, this is where expectations are not high, but they're really, really, really high because the stock's been in marked outperformer. Are we at that turn for Tata Motors where suddenly they will say that, okay, EV is now becoming a very, very prominent place for them and the commitment towards, cash flow listing, it continues. I get a sense that Tata Motors will just not stop at one subsidiary listing. I think there could be many more coming and there really could be a hint to that. So margins are important. EV commentary is important, and any hint whatsoever as to post Tata Tech if anything goes in terms of the listing per se. The stock is up 97%, guys. So please remember that that is something which is a very large factor in terms of positioning of the stock per se. So that's about it, Aisha. I think Tata Motors from a large standpoint is the big number.